Yet again, I'm here, your host, in today's video presentation. Rwanda Franklin is my name. I'm the lead tutor, the Chief Executive Officer, the pioneer of FCO Accountants Tuition Center. In today's video presentation, we are going to look at IFRS 16 accounting for leases. This topic is applicable for students studying CA 3.1 under ZICA, and for students studying strategic business reporting under ACCA. Before I get started, just want to encourage our viewers to ask questions specific to today's lecture in the chat box, and all the questions will be addressed depending on the availability of time. And also, I want to encourage our viewers to make comments on this video in the comment section. All the comments will be taken very seriously and will be used to improve our lecture delivery. For the first subscribers, I just want to encourage you to hit the notification button so that you are able to be notified for any video that is available. Please like and share the videos. Now, I want to start explaining the sale and lease back transactions. This is where the seller, who is the lessee, sells the property to the buyer, who is the leaser. It will be assumed that a sale has taken place when the performance obligations are satisfied as per IFRS 15. The performance obligation is satisfied when the buyer takes control of the property and is able to direct the use of the property without any restrictions. Is also able to enjoy all the remaining economic benefits from the use of the asset. If that is satisfied, then there is a sale. There is no sale at all if the performance obligation is not satisfied. That is, the buyer has no control over the use of the asset. The buyer cannot direct the use of the property because there are restrictions in the use of the property. In such a case, it is assumed that the sale has not taken place and the seller is obtaining a loan using the property as security. So now, when the sale has taken place, the following should be done. One, derecognize the asset. Derecognize the asset. Derecognize of the property. That simply means remove the property from the books because it is sold. Number two, recognize the right of use asset. An asset under lease is a right of use asset. Recognize the right of use asset. Number three, calculate depreciation on the right of use asset. Depreciation charge for the year. The depreciation charge on the right of use asset is based on the shorter period of the lease term and the economic expected use life. Number 4, calculate the profit on disposal, profit or loss. Profit or loss on disposal of the asset. Number 5, you need to determine the finance lease. Finance lease charges. Number 6, you need to determine the finance lease obligations. Finance lease obligations, which should be under non-current liabilities and current liabilities. So basically, these are the steps that you need to take. 5 items must be determined. So now let's go to the question. Sale and leaseback of property. On 1 April 2022, ZICA Munobe sold a property to Bond Lease PLC for its fair value of 1,500,000 kwacha. The terms and conditions of the sale satisfy. So there we are told, satisfy as per IFRS 15. The revenue from contracts with customers, the carrying amount of the property in the financial statements of ZICA Munobe at 1 April was 1 million kwacha. The estimated future useful life of the property on 1 April is 20 years. On 1 April 2022, ZICA Munobe entered into an agreement with Bond Lease, under which ZICA Munobe leased the property back. The lease term was 5 years. So we did discuss depreciation charge is based on a shorter period of the economic useful life and the lease term. In this case, the shorter period is 5 years. Unless the property will be transferred, then we'll use the economic useful life of the asset. With annual rentals of 100,000 kwacha payable in arrears, the annual rate of interest implicitly in the lease was 10%, and the present value of the minimum lease payments on 1 April 2022 was 379,000 kwacha. So now, the first thing that we are going to do is to determine what was the carrying value. So the carrying value, that is the right of use. Right of use asset to be recognized will be the part that has been retained. That part is the lease liability over fair value multiplied by carrying value of the property. That will determine the right of use asset. In this case, the lease liability we are given 379,100 over fair value 1,500,000 multiplied by 1 million. So to the nearest figure, this will give us to the nearest 252,700 kwacha. This will be the right of use asset under IFRS 16. Depreciation charge. Depreciation will be based on the 5 years. Divide by 5. This will be, it will give us 5,554. 5,540. This will be the charge to P&L. This was number 1. Number 2 will be the profit or loss. Profit or loss on disposal. This should be the part that has been disposed of. The part that has been disposed of is equal to the fair value less what has been retained, the lease liability, over the fair value multiplied by fair value less carrying value, that will be the profit. So in this case, the fair value is 1,500. Less the lease liability divide by fair value multiply by fair value, there is 1,500. Less carrying value is 1,000,000. Therefore, the profit was 500,000. That is the total profit for the whole asset, but we didn't sell all of it, the proportion. So here the profit rounded off 600. This will be the profit to be recognized. Now we need to calculate the finance fees, charges, finance fees obligations, amounts due within 1 year, and amounts due after 1 year. So now we can go to this part, we can remove it. Finance fees charges starts with the liability. The liability, we are given 379,100. Add interest. The interest at 10%. 37910. Less installments in arrears. The installments we are given 100,000. There we have 317,010. The following year, you only need to do 2 years. Interest at 10%. We have 317. 31701 less installment. Installments. We have 248,711. Now the finance cost. Finance cost in this case will be 37,910. Non-current liability will be 248,711. Current liabilities will be the difference between 317, 010, and 248, 711. This will give us 68, 299. So we have answered this short question together. I just want to again re-emphasize that make sure you like and share this video. For our new subscribers and the old subscribers, I just want to say thank you and God bless you for your support.